Traveling is part of our daily lives. Whether it's going on a business trip or flying out for a vacation, it's common for people to go from one place to another. To reach some destinations, however, getting a place to stay is a necessity. Some might prefer booking an Airbnb, while others opt to check in hotels. If you're on the latter side, then you probably have seen Hilton on the front of your hotel. And no, it doesn't stand for Paris Hilton. The Hilton writing represents one of the leading companies in the hotel industry, Hilton Worldwide Holdings, Inc. They manage and franchise hotels and resorts worldwide, some of which include Hampton, Embassy Suites, and DoubleTree. In 2019, the hotel operator generated over $9 billion in revenue from more than 6,000 units in over 100 countries. Although news of them becoming a tough competitor in the hospitality industry wouldn't come as a surprise, since Hilton Worldwide is known for their superb customer service and excellent facilities. This is reflected with their American Customer Satisfaction Index score of 82 in 2020. That's only a few numbers away from the highest possible score of 100. The premium experience from their hotels and resorts attracted not only consumers, but also investors, one of which is Bill Ackman, CEO and founder of Pershing Square Capital Management. He purchased shares of the company not once, but twice in less than 2 years, both of which yielded favorable results for the investor. If you are wondering why Ackman chose to invest in Hilton Worldwide, then let's first take a look at the company's history. Conrad Hilton, the man behind the global hotel operator, first entered the industry in 1919 with his purchase of a local 40-room hotel, the Mobley, in Cisco, Texas. He initially planned to buy a bank, but decided to buy the hotel instead, and the business turned out great, which urged Hilton to aim for a larger scale, adding even more hotels in the area. By 1925, the first hotel to carry the Hilton name opened. The Dallas Hilton was a high-rise hotel with non-customer facilities located on the west side of the building. That is to ensure that guest rooms weren't directly facing the sun, especially that air conditioners weren't invented yet. It was not until 1927 that they opened a hotel with air-conditioned public spaces and cold running water, that being the Waco Hilton. Even during its early years, the company focused on providing the best service to its customers, making them a sought-after hotel brand. Well, that wasn't the only reason they were so successful. Hilton's company also pioneered several milestones and concepts the industry uses to this day. In 1943, they bought the Roosevelt and Plaza hotels in New York. Given that they were already operating in California, the Hilton Hotel Corporation became the first coast-to-coast hotel chain in the United States. By 1947, the hotel brand's Roosevelt Hilton was the first in the world to install televisions in its guest rooms. A year later, they were the first to employ the multi-hotel reservation system, similar to the modern reservation system. The series of firsts and substantial growth of the company led Hilton to open its first hotel outside the continental United States. The Caribe Hilton in Puerto Rico also marked the foundation of Hilton International in 1949. The world was taking notice of the considerable growth of the company. Conrad Hilton became the first ever hotelier to be on the cover of Time magazine. That in itself was a high honor for anyone from the industry. Since then, Hilton International has been on a non-stop expansion, buying and renaming hotels with the Hilton signature. One of their notable purchases was the $111 million Statler Hotel, which was the largest real estate deal in 1954. 5 years later, they once again proved themselves to be a tough competitor in the market as they pioneered the first airport hotel, the 380-room San Francisco Airport Hilton. You have them to thank for introducing the idea of a private space as you wait for your flight. Aside from that, they also launched a hotel geared toward women travelers, the Lady Hilton, in 1965. It's been a series of hotel acquisitions from there. Naming each one of their estimated 6,400 properties could take a while. While the aggressive expansion of Hilton International ensued a promising future, they didn't stop there. In 1987, the company also introduced a guest loyalty program, Hilton Honors, where guests receive hotel credit points and airline credit miles. Basically, The facilities and services weren't the only things bringing in customers, but also the perks which come along with it. The company truly aced customer service. By 2006, Hilton International and Hilton Hotels Corporation reunited, and their combined portfolio became bigger than ever, making them the largest full-service hotel brand in 2009. At the time, they rebranded the name and logo of the company to Hilton Worldwide, which entered the New York Stock Exchange in 2013. While the significant growth of Hilton Worldwide was already a selling point to any investor, its attractive business model also urged Ackman into putting his money into the company. As Pershing Square stated, Hilton is a high-quality, asset-light, high-margin business with significant growth potential led by a superb management team. Meaning, even if the demand for travel and leisure activities were slumping, Hilton Worldwide wouldn't suffer incredible losses due to their light capital business model. They focus more on franchising their brand rather than actually owning the units and spending on operational costs, which allows them to save some bucks and manpower while expanding their company. Through these franchise agreements, they are provided with a consistent revenue stream and royalties. To add, Hilton Worldwide is a high-margin industry since premium hotel and resort experiences are on the luxurious end of prices. Basically, Ackman believed that a high-earning and fast-expanding company like Hilton Worldwide would yield great returns. And so he purchased shares worth about $40 to $50 apiece in 2016. Obviously, his bet on the company paid off as he gained a 32% profit after selling the shares in less than a year. Unfortunately, these were the only details which were disclosed to the public. Speculators believe, however, that the initial stake was less than the sum he'll invest on Hilton Worldwide 2 years later. When the hotel industry was experiencing slow growth, Ackman used the opportunity to purchase 10.9 million shares of Hilton Worldwide. He invested an estimated $696 million, or about 13.9% of the net asset value of Pershing Square, for a 3.7% stake of Hilton Worldwide in October 2018. He was taking on the company again in hopes of generating such considerable returns like his previous one. After Ackman's purchase of the stake, shares increased by 5.1%, from $63.82 to $67.06 in just one day. Since then, the company has exhibited steady growth, finally exceeding the $100 per share price by the end of 2019. Unfortunately, the financial market was in for a rough time as the virus outbreak approached in 2020. Before virus containment measures were imposed, Ackman knew the risk this would bring to his holdings. To address such possibilities, he spent a total of $27 million on every credit default swap (CDS) he could get by the end of February 2020. CDS protects the portfolio of the buyer from downward volatility in the market, similar to how an insurance works. In this case, if a negative credit event occurred for Hilton and his other holdings, Ackman receives a sum from the other party. This move may prove riskier compared to liquidating his assets, since the other party will only be obligated to pay him given that a credit rating downgrade happens. But obviously, with every investment comes risk, and this was something Ackman decided to take. The investor proceeded to shield Agilent, Berkshire Hathaway, Hilton, Lowe's, and a few of his other investments. So even when the market showed sharp declines, Ackman's Pershing Square still managed to stay afloat, or more accurately, receive a 100-fold price return from his hedges. In just a month, the $27 million portfolio protection earned him an estimated $2.5 billion, some of which he used to increase holdings in Hilton Worldwide. When the outbreak started, shares of the global hotel operator sunk to a low of $44. That is compared to the $100 share price before the year started. This was a great opportunity for Ackman to buy cheap from the company. Unfortunately, with the stay-at-home setup hitting the travel industry, he needed the outbreak to be over as soon as it could. He proclaimed on a news broadcast, "No business can survive for 18 months without revenue." And so, Ackman demanded those in power to take action. He even posted controversial tweets suggesting to President Trump to shut down the country for a month. As containment actions were taken, the financial market has seen a steady increase. By December 2020, Ackman held more than 13 million shares of Hilton worldwide, worth roughly $1.5 billion. The company, which experienced a sharp drop in March, was at $111.26 per share by the end of 2020. Do you think Hilton Worldwide would survive the global outbreak without controversial remarks made by Bill Ackman? Let us know in the comment section below. And if you're new to the channel, don't forget to leave a like and subscribe.